Farm for Profit Podcast. Take a listen, have a blast. Farm for Profit Podcast. Learn about farming while having a laugh. Farm for Profit Podcast.
Hey, listeners, welcome back to the Farm for Profit Podcast. This is Tanner.
This is David.
This is Corey.
We kind of feel like the Three Stooges right now. Like I feel like I need to be bopping Dave on the top of the head.
Right?
Really, that's all? You guys aren't following me up with anything on this?
Your jokes are no good.
Your jokes are no good.
Because you're not stooges.
We're not Stooges.
Just because we're dressed the same doesn't mean we're...
It is awkward. We're closer than normal. We all have matching shirts on.
Yeah.
It's odd.
It is odd, but you as listeners are not odd. We appreciate you. You are great, that'd be the opposite of odd, right?
Exactly. Please like, rate, review. Tanner wants to make
This
this
is
as
slow
most
start.
awkward as possible. You can always call or text us, 515-207-9640. Leave a review on Spotify, YouTube. I like responding to YouTube comments. Those are the funnest.
Yeah, the funnest,
Yeah.
the most
fun.
most fun.
Most funnest.
Absolutely.
Absolutely.
So, guys, we're out here at Husker Harvest 2025 Sukup booth, and we always appreciate them. What are we talking, Tanner?
We got repeat guests on. That's what I love about our listeners is when we do an interview that you really enjoy, you don't let us down by making sure we know that. And we're also going to top one of those topics that I think is top of mind.
Oh, yes.
We got to figure out what the best way we can train ourselves to be better grain marketers. I almost said merchandisers.
That's the right one.
That is really the right word.
It is the right.
A bit more specific word.
Yeah.
Yeah.
Because we can grow a crop. Typically pretty good at that.
We're good at that.
Almost too good.
And it's kind of like the financial side of things to where this isn't a lot of fun to some. Because sometimes it feels like maybe we don't know enough. So we've got the Agris Academy guys back. Thanks again, Jeff and Mike, for joining us. Welcome to our mobile booth.
Yeah, it's great to be out here at Husker Harvest Days. It's my first time out here. I'm usually an Eastern Corn Belt kind of guy, so we drove down last night. And, yeah, thanks for having us.
So for those that didn't catch the previous shows with you guys, give a little background on your guys.
Go ahead, Mike.
Yeah, so we're often confused when we first start to engage folks, but very specifically, we teach and we consult around the physical aspects of grain merchandising. You know, Jeff and I spent 50 collective years doing it with some of the best, and our mission in life is to level that playing field for the producer and teach them all those physical grain trading skills that we learned while our time in Big Ag. That's really the gist of it. We do not advise, we do not broker. We focus explicitly on education and consulting.
Yeah, we had a young lady come to us. We were at a big co-op meeting. She says, you're willing to teach us the stuff that they really don't want you to know. And it's because the way the money works. Basis is where your elevators make their money, right? They're hedgers, right? And the more you know, you're eating potentially into that kind of that space of money. And in my mind, when we started the business, there's a ledger, and too much of the profitability is slipping to the commercial side. And I feel that profitability should go to who takes the risk. And obviously the farmer is taking its predominant. It's not risk-free to run an elevator, and the only reason we're not getting that money as a farmer is we've never been at a place to get taught. And the ag schools aren't doing it at this type of level. And you get a couple of us that are highly experienced and are willing to teach, and we just focus on it. We stay out of the speculative side. We stay out of trying to forecast markets. And there's just a lot of money that gets to the right side of the ledger.
And it really helps that Jeff farms too, so he's seen it from both sides and can add a lot of secret sauce to been there, done that in terms of what it looks like from the producer side as well, not just the buy side.
Harvest season is here, and so is your competitive advantage.
That's right. The Estes XPR3 concaves are a total game changer. Think one concave, all crops, no bands, no switching. From wheat to corn, soybeans, you're rolling non-stop. Backed by their patented technology with 250% more threshing surface, you get cleaner grain, fewer fines, and beast-level capacity, all without trading combines.
If you're interested, visit EstesPerformanceConcaves.com to upgrade your combine today. Estes XPR3, harvest smarter, faster, and better.
You guys know the merchandising side, right?
That's the life we lived for about 50 collective years here and everywhere else in the world. Yep.
Super tight margins, better have everything buttoned up, real attention to detail. That's how elevators and your big commercials make money. They handle large volumes at really low margins, and they do it really, really well. And we feel, and we know now after 3 years of doing this, we can teach farmers these skills. It's not something it's not like we're pulling out, a fancy calculator and we always say you're not making any money with cosine, sine, or square root here, right? It's add, subtract, multiply, divide, and we can teach it, and we do. And it just adds tremendous value and confidence to a farm. When you understand what motivates your buyer, you understand how to talk to them, negotiate with them, how to find mutual value. One of the biggest things we teach at the end is, you just come in with a confidence about how you merchandise your crop, how you're risk managing, and then at that last stage, how you actually go into that negotiation and get top dollar for your work.
And speaking the same jargon, and I think we've brought this up in both the former podcasts, all that intangible rolls up into just being treated differently by your buyer. Your buyer knows that you know, and with that, that probably by itself is worth 2 or 3 cents per bushel every time you engage, just because you know those details, and they know you're the type of person that they can't, play that game with.
So you're not necessarily teaching us what marketing tools available. It sounds like you're teaching how to understand the mechanism that drives the market to be able to build that negotiation skill. Or are you teaching tools as well?
No,
tools. We got tools galore.
Yeah, when we teach our class, our winter class, which will start right after Thanksgiving, we start at 0. So if you're a farmer, you don't have any background, that's fine. We're going to start at 0, and we're going to start building you up. We start with position, understanding your risks. You got to know where you are. We'll go through all the various marketing tools. They have all kinds of names, kind of like buying chemicals as a farmer. What's the active ingredient? We try to get, what are those tools in the box? We try to get your toolbox full. So you can then, when do you apply the right tool? How do you catch that negotiation? So that's kind of how that class starts it very elementary and works its way up, filling that toolbox up, and then you start that. We do a live exercise at one point, and then it keeps moving on. We actually, we get towards the end of class, we're starting to look at investments, because now you understand what drives value in grain handling, where you can drive value. So this kind of we do a whole section on investment. We teach negotiation skills. Negotiations is a thing that's been studied, and there are things you can do. Now, when you're a merchant, and I hire a new merchant, I send them off to a negotiation school. But as farmers, we've never had that chance. There's so much to learn to be a good farmer this year, and this is in these days. And this is one of these skills you just have to have. You can't really outsource it, and that's just on the cash side. We teach a whole other things about on the futures risk management side. We can't tell you which way the market is. We can tell you how efficient it is. But there's a set of best practices that big-time traders around the world do, and we can teach that. And there's no reason as a farm you can't do it. You got to dedicate yourself, but it's a tremendous amount of value, and especially today's margins. And it also frees up a ton of time. It takes out a lot of stress when you really have confidence.
So why do I have to learn it? Can't I just hire you to do it?
We get asked that all the
skip the time, right? Just let me hire you to do it.
You want to take that one?
Well, we try to push back on that because merchandising, as Jeff already alluded to, intersects with so many other aspects of the farm, the operations, your storage, your agronomy. And so we really push to not only focus on the education piece, but we offer, one tuition for every person in your team. I don't care if that person's the gearhead and likes that part. When we force them to go through it and at least get kind of on the same page on what these things mean, how it drives profitability on the farm, what that means for you. The gearhead still needs to get the equipment ready if you're in a basis inverse and need to get at the crop a little earlier, and here's the reason why. So it creates sort of a unifying way of operation that creates a lot more efficiency and better cooperation throughout the various team members. So we even if there's maybe 1 or 2 people on the team that all they do is merchandise, we make sure everybody's involved, and we don't charge anybody a penny for anything else. It's one fee gets everybody in, and so that's why we force it. And the last piece I'll say is this is a knowledge asset that lasts forever. So once you've learned it, and we have a couple of retained now and or just really good students that are absolutely killing it, and they are just riding off into the sunset, winning nickels and dimes at a time over and over again. And it's that knowledge asset that's going to pass through their operation forevermore. So that's our real goal, is to, we actually tell people, we don't want you to be around us forever. Your investment with us isn't the money, it's the time to learn. And we will make that enjoyable, we will make that efficient. It's not that much time. So yeah, we try to avoid can you just come work for us and tell us what to do? We have been asked that a lot. But
It's the subscription problem, right? We want to graduate you and you to be done and be able to do it. And there's so many details because every farm is different, and we want you to get really good. Being a farmer, I don't want another person asking me for an annual subscription, right? An annual fee. And so we said we don't want to be a continuous parasite to the farm. And I know we won't. I know we'd add value. We do have what he mentioned, a retained business. We do take a handful of clients. It can't be very many, because to do it really well, it takes a lot of time to understand an individual farm. And we just work with them. It's kind of continuing education. So to give you an idea, right now, we've already, a lot of those clients are already harvesting. We're working on next year already, because good merchandising starts now, and it's from hybrid and variety selection. If you're going to have to make investments that take a long time, where you put different crops, if you want to get really powerful, add merchandising on top of everything else you do in the farm, and you just keep squeezing more dollars out of the same investment in farming. There's just a lot to be learned.
When we first had you guys on, it was a couple years ago at least, and markets were a lot better than they are now.
Yes.
Obviously, we're in some tougher times margin-wise, but that's commodity markets. Does anything change in your game plan, or is it just steady Eddie?
No, not really.
No, the skills are a constant set of skills. I mean, I'll give you an example. So I farm too, right? We have not really had a good chance to sell profitable corn. And that's got the U.S. farmer undersold. Now, there's no secrets, right?
Right.
But our clients are looking at, they're saying, okay, we don't manage on price, we manage on appropriate risk, because we're not going to beat futures markets. So our clients generally, we're hedging off some 440, 450 corn. It's not great. It's probably not maybe very profitable at all. But the reason they were doing that is because one of the things we teach is, this is best practice in the intersection. You farm, and the farm manages risk to harvest. Then you own a grain elevator business. Most farms now do, right? We own trucks, we own bins. You got whole new bins set up. You own an elevator. Oops.
Yep.
And they say, okay, I'm at 450 futures. Now I can start rolling hedges. We already have a 20-cent east to mark. Now I got 470. Maybe we go out to May. Then I can squeeze the basis. And next thing you know, we're at 450 plus cash corn at 200. Let's go 200 bushels. That's $900 gross. We're growing corn at 800. I'm using obviously rough examples. It changes across the country. That's $100 an acre. Now, do they have every bushel hedged at these numbers? No, but they've been risk managing along the way. And we don't advise, right? They look at it themselves, and every farm is different about what's appropriate risk. We met a guy in Iowa. He has 1,000 acres free and clear, and he's 83 years old. You can't touch him. He can do whatever he wants, right? But if you're just starting out, you're a young farmer. I know you've had lots of young farmers. You got to play it a little closer to home, on hitting some singles and doubles, because you don't want to get knocked out.
Right.
Yeah, and we don't, as we've said 100 times, we don't advise, but we give tools that quantifies your risk in various ways, absolute dollars per acre, that kind of thing. So you can put your positions in even early in the season and know what's at risk. Use the options markets to get an idea of what either side the market's saying could go of today's market, and then ask yourself, am I comfortable with that risk? So just by going through that exercise, I would say a lot of our A students had a rather significant hedge position on, just because they were able to see it every day and think more about it and discuss it with their teams and that kind of thing. It's not that we're asking them to press the button, but we're giving them the tools to better understand how to manage that piece.
Yeah, it's such an interesting interview, because we know what kind of happens in your masterclass, unless something's changed.
Oh, we're up.
We update it. No,
we're always
Corey,
updating.
you made the point about the market's changing. That's what's okay about hanging around with us for a couple of years, because we will have a market circumstance that maybe requires a different tool from the toolbox over the course of 1 year, and that'll flip. to the other tool, just depending. So yeah,
We also learn a lot from because we have a retained business, right? And they're all over the country. And we always are learning from the people we work with, right? And you get into different situations, and it's super interesting. And we take the best of the best and put that back in the class. That's how we upgrade it. So, the guys that went with us first year, they got a good class, and the next year gets even quite a bit. It's the 80, probably got 80. I don't think say it got 80% better, but it definitely got easier on us production, right? And also on them and the content. And this year it'll just be just that much better. And we'll talk. We spend a lot of time in class in after hours, or we have one-on-one discussions. We have office hours as part of class. What do I do if it's not profitable? Last fall we already knew it was going to be a struggle. And what do you do? Well, here are things you can do, right, in the toolbox to get yourself to profitability.
So I want our listeners to know what you kind of teased about already. What are those things that you're teaching around that understanding the grain merchandising side of things that can pick up a couple extra pennies that we just need to know something that we don't know already?
Well, there's no silver bullet, right? It's like growing 300 bushel corn, right? You got to do a whole stack of things right to get there. And you can't go off to one of these peer groups and they go, oh, just feed this magic juice and you got 300. It doesn't work like that. And merchandising is linking together a series of things that Mike usually loves this one. It's like forevermore, we will never sell another cash contract of grain. You will negotiate basis on every bushel first, and then you will talk about futures. That will bring about 3 cents a bushel on every bushel of corn.
always separate futures and
Separate futures from
Period.
basis.
Do not ever say, what are you paying for corn today? That is not the right, what is your basis?
Right, and it's just that little trick of the trade, very small, all your listeners, right, will sit there and you'll negotiate basis first, and then you'll talk about futures. Do I want to spot them? Do I want to exchange futures? Whatever. Do I have an HTA against it? All these things, right, that are out there. That little trick, 200 bushel corn, 3 cents a bushel, $6 an acre, 1,000 acres, $6,000.
So why does grain, I've always wondered this, why when we market grain is it any different than candy bar at Casey's? The candy bar at Casey's is just $1, period. It isn't,
When's the last time you bought a candy bar at
It's
Casey's?
70
They're way more
cents, but
expensive than
the
$1.
shipping to get it here cost me negative 30 cents, and then we had to add that to it plus tax, and then all of a sudden we have this formula to buy the damn candy bar. Why does grain do it? Why don't they just make it simple?
There's so much to that, but we'll go maybe break it into two main points. One, if you look at pricing of grain in the United States, there's two knobs. The big one's the CME, and sometimes we curse it, but at the end of the day, it's a gift of price transparency to the U.S. farmer, and the whole world comes to the CME to price grain, like it or not. That's first part of your question. The basis acts as the local price knob, and that's relative to export markets, barge freight, value of space, speed of harvest, size of harvest, crush margins, feed margins, all these the various local drivers of grain that are tuned with that knob with the basis. That's why that exists. And that transparency, like it or not, is a gift to the U.S. farmer, the two levels of transparency.
But again, the guy that makes the candy bar, he didn't say, oh, my peanuts cost me more money, so I'm going to charge you just a little bit more.
That's a finished product, though, not a basic commodity.
The problem is you're in a commodity. If you want to get out of the commodity, we had this conversation with a friend of mine. He's like, you got to get into something that's not price sensitive to the commodity side of the world.
Got it.
Yeah, they're trading the cocoa and they're trading. I'm sure the peanuts are trading.
Correct.
All that.
But
so.
there's variables is what I'm getting
But the
at.
wrapper costs probably as much as the commodities in the candy bar. So I used to work for a venture of the Mars family. I got to learn what a sweet deal that is. But literally and figuratively.
Yeah, literally, no pun intended.
Yeah, and we talk about there's been a whole bunch of chatter, right, about the pro farmer tour is terrible, and it's and Alan, all the chatter that's been out on social media. Look, the people that trade this market, they're looking way over the horizon. Even the disease that's in the crop, the dryness, it's already in the market. It's modeled. And now with the computing power we have, you can say, the crop is going backwards, right? But that's ingested. You can't wait for today as a trader to see what happens. You got to have we had 2 full-time weather people, meteorologists on staff, right? That's the game is played at that level. Be thankful you have CME. I know that people, it's a bunch of crooks, but you do not want Mike and I trading in a market
where you don't have price transparency.
Where you don't have price transparency. because then the commercials will have power. I tell people that my largest single trade was in fish oil. Profitability.
Yeah, I remember you telling us about that.
Right, and it's because there's no transparency, right? We could sit there and buy the fish oil from all around the world before anybody knew. You can't do that in beans and corn and wheat. And yeah, the CME is a gift of transparency to the U.S. farmer, because in other places in the world, it is not a fair game.
Yeah, Ukrainian sunflowers, there was no price transparency whatsoever. And oh, by the way, we were the biggest crusher in Europe at the same time. So yeah, I mean, we made a.
So why don't you guys just teach us about those markets so we can make money and not worry about these?
Not do any court. Yeah.
Yeah, if it was easy, right, we'd all do it. And that's the kind of thing, like, we know from our experience, it got to be extremely difficult for the commercials to make money, just flat price trading futures. It has, the world has gone past them as far as the scale and the volume. The big commercials in the U.S. are tiny. They're making plenty of money. Don't worry about it. They're going to make some money, right? But yeah, it's extremely hard, even for somebody. When we worked there, we had staffs, right, and meteorologists and black box math PhDs and all these
And quite
hundreds
frankly,
of people.
data that you can get now on your phone for free, but 15, 20 years ago was genuinely unique data, but still it was very hard to beat those markets.
So the idea that the broker community, the advisor community is going to somehow magically tell you when to sell a few, it's not going to happen. I'll bet any paycheck.
Not consistently.
It's not 1 year right, 1 year wrong. You need to be a risk manager in your farm. And the comparison I draw is, look at who survived in ag in U.S. They're hedgers, right? The elevator that flat price traded, even the guy who fed fat cattle, although right now they're on a roll, right? They have their days, and then eventually they go out, right? And so they all have risk managers. Coca-Cola has a risk manager. Cargill has a risk manager.
How is technology helping us make that decision? Do you have anything in there? I'm thinking satellite views. I'm thinking when they come out in predictive yield, we all registered so many acres with a 578 at FSA. They know how much we planted. They kind of know what the yield is. We have drones that are going over that predict that for us. I got to think that the technology gets us a hell of a lot more accurate rather than, oh, here's our estimate from USDA, and now the markets go up, but now the markets go down, and now they go up. Like, I got to think that technology is bringing some consistency to that.
It's bringing more accurate, and it's still wrong, right? But it's, yeah, the computing power and the modeling and everything just gets better and better, and now it's accelerating with these AI chips. It's just going to get better and better, and you're right. You fly drones. You know, NDVI used to be, you know, millions of dollars to get access. Now it comes to your phone, right? It's a nothing.
Yeah.
But then they index that, right, to yield and moisture, and there's all kinds of, they've built models on top of that to get through the crop just looks green kind of thing, right? They, you know, we go out and walk fields in the U.S. and Ukraine. I mean, they, you know, these big companies have people on the ground, and of course, communications are so much better, right? And how that data is transmitted and who's playing, and the dollars are so much bigger. You got to become a risk man. You want another hint from your question? Stop being a speculator farm and start being the risk manager of the farm and thinking like a risk manager. It changes your perspective. It makes you make better decisions.
And also know what speculation is, because sometimes you know, until we've had that talk with you, you are doing certain things that are genuinely speculative that you may think are offsetting risk, but are only adding to it. One of the things one of the adages we always tell producers is, you're always way longer than you think. You're long this year, you're long next year, you're in this forever. So you don't need to beat yourself up over maybe missing a trade along the way. Go win the next one. And, you know, anytime someone asks you or suggests that you get long again in futures, you got plenty of length. So yeah, it's also, you know, the main point he made, knowing the differences is key, but we see that a lot of times in terms of people think it's kind of under the banner of risk management, but it's really speculation.
Yeah, I've always wondered how much play social media has into all the data and the resources.
Hugely.
Because we've got a large audience. We should take all of our audience members, and all of a sudden our corn yields across our listener base is, 10% off APH. Can you have any influence that way?
No. Do the guys that have good yields post on X? Not often. because they're not.
How many
They're
bad,
not welcome.
How many bad fields in Brazil did you see last winter? I saw thousands of them.
Yeah, it's true.
Right. I mean, it's not a random sample, right? And social media is probably not where I'm going to go.
Its own little bucket.
I'm not going to go trade basis the latest, the average of the guests of the social media.
I would say quite the opposite. Like I'll pick on another thing that is a little bit of a pet peeve of mine. We were at a recent event, and I don't know how many times the producer said, gosh, I just kept getting feed after feed after feed that it was going to be the Omega block, and then it was going to be scorching hot, and then for whatever reason, 1968 was a thing. I don't know if you caught that. This year's going to be just like 1960. What does that even mean?
6-7.
Yeah, so and they kept saying, I kept hearing all this bad weather, and nobody out there, I'm sorry, but nobody said, we're going to have a relatively benign, relatively mild, super wet year and a record crop. Nobody in the weather space.
You don't get famous that way.
Absolutely no one. And I'll throw in one other thing in terms of thinking about being a risk manager. We had 2 full-time weather folks in our world, and I loved picking their brains. And it's great to catch super experienced people at the end of their career. And one was ex-NASA and one was ex-Army. You know, between the two of them, probably 50 plus years doing meteorology. They said with a straight face over and over again, because trust, as traders, we were trying to pry every little thing out of them. They're like, beyond 48 hours, it's crapshoot. and especially in the Midwest, with the exception of a few weather patterns, especially from about March to about October, it is an absolute crapshoot. So if somebody throws a model out there, okay, take it for what it's worth, but don't necessarily have it, especially if your lying eye, or your eyes are telling you that out the door that my crop's in, it's cool, it looked great, it's already popped up. It's like, maybe you should hedge some risk and not worry about that Omega block 3 weeks from now that's allegedly supposed to be coming. So
yeah, so maybe you shouldn't go to X for your grain strategy.
Sometimes when you're looking for a story or looking for something, you find it.
yeah.
Right?
Yeah.
And you don't, as a meteorologist, you don't get famous unless you make a bold prediction that actually hits, right? That's how you sell a lot of weather subscriptions.
Yeah. So that weather's another one that just in the social media world that I think has clouded people's thinking, and that's what we try to teach. Stick to these core principles, and you will find yourself paying less attention to that and paying more attention to the things that are genuinely impacting the profitability of your farm.
So, out everybody that's gone through your program so far, what's the first thing that they typically go, "Oh, I didn't know that"?
Oh, I'd say it's the cost of carrying grain. The real cost of carrying grain. We spend quite a bit of time because you get that every day. Is if you're trading how much grain? If you have a 4-cent margin in a grain elevator and interest is costing you 2 cents a month and it's shrinking, you can blow. If you don't have the trains there on time, you're not only blowing your margin, you're negative.
Especially in beans.
So what goes into your cost of carry?
So you've obviously got interest, right?
As defined by?
We say either you got 2 choices. You can either use the treasury rate, or you can use as a farm, your highest cost debt, because you could sell the grain and pay off your highest cost.
Yeah, if you're not farming with the bank, you should put the treasury rate or some cost of capital. It's not free.
Right.
We hear that a lot. Oh, I don't charge myself anything. No, it's costing you opportunity cost.
And then it's
every month.
And the grain shrinks every month. Okay, and we're doing the example on farm storage, and then starting to do that calculation. Does it really pay me to carry grain? That's probably just the first. So we go through those the basic calculations. We teach a new merchant. All right, we're going to put this grain in here. What are we going to earn? How is it going to work? How are we going to make that pay? And we're basically we can teach farmers how to run that place like a grain elevator and squeeze money and be efficient at it. I know we're sitting here and we're in the souk up, and I told Mike, Mike and I have not approved, we do consulting, a bin project in 2 years. It's just basic storage. We absolutely, for like wet holding, cooling, value-added processing,
logistics.
Well, there's other reasons besides storage, but just to store grain, the cost of the bins are too high relative to what we would think an annual payout is. Now, we do a lot of bagging. I bought a bagger for my own farm. That was great content, right? Because we learned all the rumors about bagging, but we're bagging grain as a choice for storage. We see we've got clients that are bagging grain, dry grain. There's all kinds of ways to skin the cat, but once you get into the details of, this first thing, here's the cost to carry. We looked at bagging because we knew we could roll hedges and earn basis appreciation, and we paid for the bagger in the first year.
That probably doesn't put into depreciation or 179 deductions or any tax implications.
Oh,
on the fact that
I'm a finance junkie, man. I absolutely.
So it is in there.
Absolutely, upfront tax shields and all that stuff. But I'm just
we
just
help
in the
build
basics.
models for our producers to lay all that out in great detail.
Yeah.
Jeff and I were part of the merger and acquisition team in Cargill for, I don't know, 6 or 8 years between the two of us. So we built all those models before for whatever it is in ag. So we also bring that to folks who want it to get a little better idea, because one of the things that hit us over the head when we were talking about interest rates and balance sheet and interaction with your bankers, a lot of times the answer was, well, we're given money because our balance sheet can take it. It's like, what if you looked at that investment a little bit more specifically, project by project, as to what returns the best, and then think of it that way. And
So it's farming for profit. I mean, and this year it's going to happen again. We got very wide carries. We're going to be able, and we're talking about hedged grain, working just like an elevator. We're going to hedge the grain. You got to lay the post, and then we're going to roll hedges, and then we're going to earn basis appreciation. We're going to keep that grain in condition, and we're going to make the right blend. We're going to deliver 13 moisture soybeans. We're not going to over dry the corn, and we're going to do operationally excellent stuff that we can control, and stop spending time watching futures markets tick or listening to the chatter that's. Mike and I love to talk chat about markets, but it's not value.
we'll give you
added.
our opinion.
It's not value added. I can't tell you where futures markets are going to go. And when we started the business, I was like,
When you've been humbled by them many times, as we have, Jeff and I had some of the biggest futures positions in Cargill, you realize that it's a tool and it's a hedging mechanism. Tread carefully on the speculation side.
you're going to have losers if you're a spec.
That makes a lot of sense.
We've had tons of train wrecks in our corporate life of people who lost their job because they were dead wrong in futures. So
Meet Maya Cornheads, built better for over 40 years to power through down corn, high yields, and tough fields without flinching.
These durable, low-maintenance heads mean less downtime, less grain loss, and more profit per acre. They have the option for down corn attachments or direct-driven chopping. They ensure that your combine will move smoothly, fast, and full at all times.
Don't just harvest your fields, conquer them. Visit MayaCornheads.com to find the dealer near you.
This year, there's more carry in grain than there has been the last couple, wouldn't you say?
In your neck of the woods, it's going to be bigger than last year.
I mean, I know just in soybeans, there's a 50-cent carry just to go to the last half of October.
Oh yeah. It's
Right.
obviously the lack of the Chinese vessels in the Gulf, particularly in the U.S. Gulf, is a serious issue to farming, and because the Gulf system was dependent on Gulf vessels,
Right.
and they don't have crush plants and stuff necessarily at that scale.
Yeah.
We're having trouble with grain that wants to flow down the Miss, the Illinois Upper Miss, we name it, and so we've got extremely low basis along the river system, and there's very large carries until we see what happens. It's expensive to hold beans. Interest is more. Shrink is more, right? And you got to
But I'm
watch.
talking like
Yeah.
a month or less.
Oh yeah, just the cash carries are incredible. And the other thing we got going, Mike and I talked on the way down, is harvest is about 3 weeks early at least. And when you think of a country that's grinding through over 1 billion bushels a month of stuff, and it's all of a sudden the crop is early, well now you're taking roughly 1 billion bushels of space out of the space. There's a space S&D out there, the big guys. So we've got grain piling on top. Like today in in Ohio market, where we take our soybeans, a big crush plant, 200,000 bushel a day, they're plugged
before harvest in
Before
a short
harvest.
crop prior year.
because we call it the Hall of Shame. The elevators are emptying them out, and short in the last of the MP, it has to be priced out by the 30th. And those people have paid interest and storage for 10 months.
So you guys have a system, a class you're teaching, of course. It's a repeatable process that has worked over and over again. When there's repeatable processes that are out there, it becomes status quo, and new people come in as disruptors. If you had to forecast, what would a disruption to the market look like right now?
You're talking about,
How could I set the grain bomb off to where I win?
I assume you're turbo long. You're a farmer.
Yeah.
Yeah, I mean, there's all kinds of crazy things. We've seen it all. We've lived through Chernobyls, and we've lived, all kinds of stuff. The Chinese could lose a crop somewhere. Unfortunately, in farming, the kind of the way we make money or have these big, the best days is something bad has to happen to somebody else.
It can't happen on my farm.
It can't happen to me.
Quote,
And as
one of our-
Americans, we'd prefer it happen to some other country.
Yeah.
But
Volatility is what traders make their money on, and
Can we make the volatility politically?
no.
Can we?
not right now. Or
say
we would have. I think we would
Ukraine
have.
this or Brazil that or Canada this, and is there a way that we can use our card as the big boys to play?
The market's too fungible. It just finds a place. Think of like oil. Think of the oil markets of what have happened in the last 4 or 5 years with all of these sanctions. It finds a way. Markets, commodity markets especially, they find a way.
So look at the Chinese today, right? They're not coming to the States. I'm very concerned. I'm going to lie. We talk a lot about growing beans. We're struggling to grow beans profitably in my farm. The Chinese have learned to live without us. Okay, and they're going to prove it to us right now. There's no boats in the Gulf. There's no boats coming off the West Coast. And now they've learned in Brazil, where beans are a premium, because they don't have to compete with the U.S. because of the tariff. They're just under that, right? Where if you're investing in infrastructure, I mean, there are some very good Brazilian, and now you got Argentina getting it. I mean, we've kind of created.
And they're buying meal from Argentina too, which they almost never do.
We've kind of
to
created
extend
a monster.
this discussion out.
And I'm just concerned. I told we're going to plant corn on corn. I know in Iowa you guys, it's par for the course. You'll do corn on corn. In our punch, we'll be no-till corn on corn. We're going to learn. We're not going to do a lot, but we will try no-till corn on corn because I'm not sure I can grow beans profitably. And then, again, merchandising, understanding markets, and then looking over. Now it's influencing how I'm going to run my operation.
So why doesn't the Farm Bill just go buy Brazil? Then we own it.
We could buy Greenland too. I mean, it's.
I mean, honestly, why? I mean, if that's where people see opportunities, they see to get in front of something and make it happen. So if people are forecasting, or if we're very rich people out here that are hedging, why not make the hedge and say, well, beans don't work here. Let's go to Brazil. Let's buy some land there. Let's do our beans there. Corn on corn in Iowa. We're kicking ass, taking names.
Along those lines, the Chinese are investing in infrastructure in Brazil.
They're not dumb.
Go back when
Yep.
we're going to go.
What Japan did.
Japan did when we embargoed the Russians. I'm how old I was a little kid back the way when this happened. We became a supplier that was not reputable all of a sudden, and the Japanese looked at that, who were completely dependent on us at the time. And
Once a year, they got to buy.
they went
Northern
down.
Hemisphere
They started
harvest,
and
that's
put
it.
in port and unleashed what effectively is now a very good competitor. You got to respect your competitors in all kinds of things in farming, and yeah, they're very good at it. And I am concerned about the policy, but I mean we're drifting away from merchandising. But then again, it's just okay for my farm. What's the appropriate risk?
Yep.
Well, I mean, seeing this as one example, and again, we don't advise in futures, but we can get in the weeds on the physical side. We've had some folks in far northwest Corn Belt that already had a space issue and a really big crop coming, and we're like, you might want to get some beans on the books, even if you have to hold your nose and do it, because you might go bidless, and sure enough, here we are.
You're talking like the situation out in
due to the knockdown effects of what's going on geopolitically right now. So.
It's for those of your listeners that don't farm in South Dakota, the basis is 115, 120 under.
I heard that. Yeah.
Right, and there is a chance that there will be no bid out there for you will not be able to dump beans. So I mean, obviously, we talk to clients. Okay, what's our next strategy? Right, what are we going to do? How are we going to weather this storm? And you got to think about that. But we as farmers, the U.S. is absolutely the best place in the world to farm, in my opinion. We have the best infrastructure. We have rule of law here. We have transparency. We have a currency that works. We generally take it for granted, but every time I clear back into clear customs and they say, welcome back to the U.S., Mr. Gate, I said, absolutely. I'm glad to be here, and I think your listeners should realize it. And I know you probably got some international listeners that are going to be like, oh, it's great to farm in the U.S. We take it for granted.
Mm-hmm.
Yeah, the whole bean delivery thing is something Corey and I have talked about because locally we don't have a lot of options. Locally, this time of year, we should have drive-through lines open full hours. Or were they open a third of the time they typically are?
1 or 2 days a week, right?
People
now.
are clearing out the old crop. That's what and that's exactly what happened in Ohio last year. And basis was a train wreck when harvest kicked in.
Yep, and it's somewhat even in a tight crop, we still have, the procrastination move, and that's extremely expensive because of the interest in the storage. We just get into the details. We tell people when in the details. We're not going to call markets.
Though we can provide context that help them, and this topic is incredibly important. And I'll throw in one last one too that's important that Jeff kind of alluded to. I think this idea of ending stocks and what was the other? Oh, and stocks to use ratios are going the way of the dodo bird because the world is too multi-origined to pull from. And, you know, who cares? The market doesn't care if it gets a little tight. We've seen that. You know, wheat now, no one cares because you can pull from Argentina, you can pull from Europe, Ukraine, Russia, Australia. Like, who cares about ending stocks in America when you can just turn around and go buy from Australia? So it's starting to get that way to a degree in beans. And corn's not there, I don't think, but beans are definitely there because there's so many other origins from which you can pull beans right now.
So do you have suggestions? If we can't sell it to other people, how can we use it?
You guys are.
You got to start making soybean muffins for breakfast.
That's what I mean. Like, what can we?
Well, we've always said, you know, policy-wise, you just got to burn more of it is one way.
That's, you know, and that's.
I mean, I
joking. I mean,
yeah,
it's
just sort of hands up. I don't know. Feed it more. I think we have all the capability from the animal ag side here to raise more animals. I absolutely believe that. There's all this marginal ground that's gone into a row crop. There's no reason why that couldn't get converted more into, you know, something on the cattle side or whatever. I think that might be a market reaction. We could raise a lot more animals in this country, I think, to be part of that demand part of the S&D.
Yeah, do we see more CRP acres come in? You know, do we push this program, create a competitive option for farmers to set aside acres?
Set-asides never work. Supply control never works, okay, because the Brazilians are going to take down one more forest, okay,
Yeah.
and they're going to hook, you know, 2 D10s in a battleship chain, and they're going to go in 2 million more acres of beans last year. If you are in Indonesia and you're buying palm oil, which is a competitor, right, 70,000 hectares, 140-some thousand acres, they put in the whole thing, they clear the island, and it for every 1 acre of palm, it's like 13, 14 acres of bean equivalent.
Wow.
In oil.
All you're going to do is give away market share. Okay, and we're getting a long way from here. That's why the biofuel stuff, I mean, we've just given up huge amounts of export market share. Until we become a net deficit, the policies won't work. We're just going to give up share. And the Brazilians have said, thank you very much. We're going to go ahead and produce it. And it's concerning as, you know, I farm, right? I'm out there every day. I got land and debt and equipment and all this stuff. And, yeah, but we have to control what we can control. And that's why we get back to get the noise out, work on go Brian Hefty, the $100 an hour, now $200 an hour job.
Yeah, with inflation, it's
Yeah.
gotta
Right,
be
with
at least
inflation, we got
200.
200, and work on the things we can control. And there's this huge list. Get in a class this winter, change where you are, get that understanding, and then we take a few retained clients every year around the country, and we do a lot of it because we're interested. Mike and I love it.
Yeah, you certainly dispel those that can't do teach method, right? Because you're in it. You've been in it. You've got the farm yourself. You're participating in it, and you got a program, like I said, that has reoccurring folks that continue to come back.
Now, we're at the end of our careers. We want to give back, and that's part of why we do this. Ag's been very good to us, and we find it extremely rewarding when the lights click with our customers. It's like a couple times we walk back to the car. It's like, I love my job. When you really know you're making that impact. And Jeff says this, you make an extra 10 grand on a trade for Cargill. It's like, okay, that's Tuesday between 9 and 10 in the morning. If you do that with a couple little adjustments and thought for your producer customers, I mean, you're just like friends forever.
Never going to buy a beer in that town again.
No.
Right? I mean, it's hunting rights, and you're going to hang out with them. I said by the time we're done with this, we'll have friends in every little town in the country.
So
what's the class look like this fall?
Yeah, we're going to start right after Thanksgiving. We go for a little while, and then we'll start back up after that. So we have like a 3-week break. It's the same. We're going to run the 10 weeks. It's in the evenings. It's all online. You can show up and hang out with us. We're in an empty classroom up at a college up in Minnesota, and we do 2 hours a shot twice a week. They're recorded if you happen to miss one. I think they're better live because we use up-to-date examples.
But that said, it's online and accessible, like literally at 8 a.m. the next morning. So it's very current.
And you go to class, and then we have we immediately schedule office hours. I mean, some of you have been to college or not, but you go in our calendars in the off days, and we go look at your farm, and we put your farm stuff in our worksheets and get, because the best students are the active ones. And we have students
And
that
we will get your money back in about half the class time just by understanding your markets, your operation better, your positions, helping you with all of that, helping you think through your trading and merchandising around that by just engaging us.
but not picking futures.
Yeah, nothing to do with futures.
Because I'll be
zero.
guaranteed I'll be wrong eventually and you'll hate me.
No.
It's going to happen.
Another important part of our class, too, is we spend a lot of time what we refer to after hours. So we've got the 2 hours of instruction, but we are really focusing on the after hours of good content. Anything from insurance to, we have an ag banker roundtable. We had bin conditioning systems, that kind of thing. So we bring people we know that we run into these sort of things to have a good meaty hour where you can learn something about new technology or something you've been on the fence about. So we're not talking the whole time too. We're again maybe 3 hours is between the 2 and then 1 extra hour is a lot, but no, it's always there after you bought the class to go back and access it and that kind of thing too.
So you can sign up for class now. You go to our Agris Academy website. You sign up for class. We have an early bird discount.
That goes to October 1st.
Class is not expensive. It's by design. We don't want to make this out of reach for a small farm versus a big farm. It pays very well. I admit it. I say concerned, but our largest clients leverage it over a lot of bushels. It's a lot of money. But it pays so fast that, I mean, like I said, our smallest farms are probably a couple hundred acres and just wanted to learn. We attract a learning type. Sign up. We start the class. Like I said, you got after hours. You've got office hours. You can talk directly to Mike. We always laugh. You can pick whoever you want. You know, it's like we have a little pool contest.
No, Jeff is better than me on some of the farm aspects because he does it and I don't. So
He's saying unfair advantage.
No.
30 years versus 20 years.
This is why he's a favorite.
Yeah, that too.
Yeah, and the class ends, it's usually in March, I guess, right? We're finished.
End of February.
End of February, yeah, and then
It's on we keep it open for another month, so you are still there, even if you haven't. We have some people who hardly got going, who all of a sudden got office hours and started looking through the videos. So yeah, we leave it open for a whole other month afterwards to still engage us.
every once in a while I worry. I'm like, have you seen this person? It's like college.
We got like
college. Everybody shows up on the first
We got like
day,
100
and,
students. It's like,
and then you look around and you're like,
where is this person?
were you in this class?
Yeah.
So no, and the class is great, and then we do so that's the class side of things, and like we're signing up now for that, and there is an early bird section, so get in there and get signed up and secure your spot. I think there is a point where we'll stop. I think just because there's a lot of office hours, right? There's a lot of
that can get pretty taxing.
We have a small retained business that we take a handful of clients that have us come out to the farm. We do some teaching at the farm, and then we also offered a program for people who have been through the class, because then they've already got the basics down. Our conversations are faster. We don't necessarily go to the farms. We still do go to a lot of farms 2-3 times a year on our full retain program, our lighter program for the people who've been through the class, which is working real well.
Working really well.
And we, again, we're not advising on futures. We're going to ask, is that the appropriate risk? Do you have the appropriate risk? We ask hard questions. And then we're doing all these little things around, here's the calculate. And eventually they're outrun us, and they don't need us anymore. We want to make ourselves obsolete. We don't want to be a parasite to the farm.
I didn't realize you wrote that down as well.
Yep.
Uh-oh.
No,
Maybe you should start a succession plan for you guys if you guys are going to stop at some point. More people come in.
We absolutely could. Mike and I kind of enjoy just being the two. I mean,
Right.
It's a boutique deal, and we enjoy it. We do get asked pretty regular, and we always have our eye on. Well, we know some people. They have to have a right mindset.
Right. Yeah.
A lot of people that come into the brokerage, and they kind of have an addictive personality, right? They love the markets, they love the banter, the da-da-da, and that's not we're such a different play. You got to have the right play, and right now we're right sized, I guess.
I like that. So they got to head to agrisacademy.com.
Yep.
Correct.
That's how they can get signed up. We appreciate you guys sharing your over 50 years combined experience and the work and effort you put into a class to try and help farmers, help them understand.
Yep.
Put the tools in their toolbox to be able to understand the risks that they've got. It sounds like to me it doesn't matter the size of your farm, as long as you're the learning type.
Yep.
That is willing to
Bingo.
dedicate this time
The learning type.
into the program. It'll be good. You'll be able to help us build confidence. You'll be able to help us pick up, like you said early on, those nickels and dimes, sometimes pennies that really add up.
Stacking dimes.
Yeah.
Add a lot of things. Knowledge is one of the most powerful assets. That's the reason Far for Profits is as successful as it is. It's just a bank that everybody can go back into. So thanks for doing that as well. We appreciate it. Hopefully listeners run after you. Like, I mean, it should be something they should sign up for. If you have any quarrel, fear, misunderstanding,
You got the biggest expense is your time, just to be dedicated. We have a lot of families, so it's mom, dad, and the succession, son or daughter. Very common. They do it together. You know, we get some big farms where they're trying to get everybody, you know, to online or at least together. And yeah, so our client is very diverse. We do see a lot of that. I call them maybe just out of college and don't feel they got enough in the various ag schools. Kind of that age group, maybe that's 25 to 35 is not uncommon. But we also get people that are late in life and just love to learn.
Do you think more women or more men make the grain decisions?
I think that women are highly involved. I do think more men are still pulling the trigger. But we do
But
have,
if we do see involvement in the operation, it's usually on the finance side and the risk management side, more so.
Got it.
Yeah.
that's great. Well, this has been a pleasure. We thank you. Thanks for the flexibility. I know you had a bunch of things come up, but I'm glad that we got to
And
still
you
share.
guys too. We changed on you guys a couple times too, so thank you.
We still got it to you guys, audience. We appreciate the time, sticking around, being able to listen to this. And if you found it valuable, make sure you let us know. Again, that's farmforprofitllc@gmail.com. Head over to Agris Academy. Let these folks know. You guys have kind of been showing up on Twitter, on X lately.
Yes, we're
it's our chosen social media platform.
and we're not like the extrovert type, so kicking and screaming, but we're getting pretty darn good at it, if I do say so myself.
The humor is spot on. I do appreciate that. I think we're getting staged up with these
right.
flyovers.
Yeah.
As this goes. But thanks again, listeners. Until next time.
Thanks
have
for
a good
having
one.
us.